I want to
Mhm.
come back to one other kind of dimension of retailing. I mentioned the importance of consumer spending to the economy, of course. Two-thirds of our economy is built on consumer spending. A lot of that's done on credit. I like to say nobody spends money they don't have quite like Americans. A lot of the sales in all of these big box chains comes on a credit card, either a store card, a
Mhm.
proprietary card, or a co-branded card. How is that intersecting with the current retail dynamic? Is it as important as ever? Is it growing in importance? That type of thing.
I think it's always been critically important. I mean, you and I have covered this for a long time. It's
Hmm.
always been critically important. You and I covered the Sears sale,
Hmm.
years ago. They wanted to keep the servicing because many of them had it intertwined with their customer service capability, and they didn't want to give that up. And they wanted some control over point of sale, especially Sears because of appliances.
Well,
And home
Sears, yeah, Sears. The quip from Sears was, they were a credit card company that happened to sell stuff. I
exactly.
mean,
I
that's how
remember that.
that's
Oh
how
yeah,
big the credit
yeah,
program. And as I recall, the sale the profitability from their store card versus the retail side of their business was about 50-50.
it was.
And
It
from one
was.
year to the next, it kind of flipped on that 50-50 divide.
Yeah. Um, yeah, credit's still incredibly important. And, you've got interest rates for some credit cards, into the 30s now, which is pretty scary when you really think about it. Um, the lower end consumer relies heavily on credit. But
I'm
one thing I want to touch on,
Yeah, please.
student loans,
Hmm.
the impact of student loan payments on retail. We've been dealing with moratoriums, the impact that can and will have on retail as these payments start up again is going to be pretty significant. We're talking about what, 1.6 trillion in round
That's
numbers
correct.
of balances. I think that's a shoe that's going to drop,
Hmm.
in the not so distant future.
You raise a very good point, and this has certainly been talked about and written about quite a bit. The moratorium is off by over a year now.
Yeah,
Actually, it's off by over a couple of years, but they started reporting back to the credit bureau. So you have credit consequences to your credit
exactly.
profile starting about a year ago now. Um, you can see in the New York Fed's data that delinquencies, now that they're reporting, have spiked up to far higher even than they were
Yeah.
pre-pandemic or even, GFC kind of era. So it's definitely, and that was all predictable and to be expected as you have
Mhm.
a slug of borrowers who were never going to pay, who were always
No.
going to be delinquent, now being reported in one big slug. We'll see where this normalizes. My assumption is it will normalize somewhere where its old run rate used to be. We'll
Yeah.
see, but which is, by the way, quite high, right?
Mhm.
In the scheme of consumer credit. But this has been talked about, that the stalling, delaying of household formation. We could have a podcast just on that
Oh,
topic.
yeah.
I did not pick up on that thread in the earnings calls. I don't know if maybe I missed it, but I don't think that the retailers are pointing that as at least having much of an impact this time around at this point in time.
It's, as you said, it will normalize over time, but normalizing can bring up a whole different kettle of fish here. What's going to happen and who's going to get hurt and who's not.
Right. Yeah. I mean, like I said, that's a, this is a philosophical question.
Mhm.
It is a social construct question in my mind that could warrant many podcast series.
Yeah.
In fact,